Welcome to the weekly Forex video, this time taking a look at key price action at critical support or resistance on the majors. First of all though, be aware that this video is shown to a global audience but may not be suitable for everyone. Take a look at admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more details. Also, please be aware that trading foreign exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This video is for informational and educational purposes only. By continuing watching this video, you agree with this disclaimer and you are aware of the risk involved when trading. Let's kick off the weekly video with the pound USD. I'm looking at the 4-hour chart right now, and we're seeing a retracement against this particular bearish momentum. And I think that this could basically run up to the 61.8 confluence and the R1 weekly pivot point at around 124.75 and a psychological round level of 125. At this moment, price has paused at the 50 fib, but it's actually trying to break through that 50 fib right now. I'm not sure if it's going to succeed at this moment. This candle is still open. If this particular candle will have a close near the high, I think a small retracement of that candle, perhaps down to 124, 123.75, could see a bounce and a move up to that 125. And I would be looking for bearish engulfing twins, some bearish candlestick pattern at 125 for a bearish turnaround and bounce in this resistance zone. So that's something I'm looking for, basically, is that continuation from the 50 to the 61 and then a turn at that fib. Now, if this were to be a big pin bar and a big close near the low like this, or even a bearish candle with the close, with the close lower than the previous candle close, then I think that there could be a retest of the pivot point, the weekly pivot point, and a bounce at that weekly pivot point for a move up. So that's something that could happen too. Let's see how this candle closes. If that does happen and price starts to show a bearish candle after it's closed, I think that the pivot point is a nice level for a bounce because it's about halfway. I think it's about the 50 fib. We can put on the fib very quickly and just check that out. No, it's a 38.2 fib, but that's anyhow still a fib confluence. There's a moving average halfway to Keltner, Admiral Keltner band, and of course the weekly pivot. So there I think could be a bounce for a move up and then again a downside. So that's what I'm looking for the pound. In a larger perspective, be aware that basically this could be basically a three-wave, part of a triangle of a wave E. So if that happens, and this is a wave E, price should not break above this top, then the wave E is invalidated. This could be a wave D, this could be a C. So this could be a triangle pattern. So what I'm looking for perhaps is kind of a three-wave pattern within the E. That wave E can stop at any of these fibs, to be honest, and then start a new downtrend. So that's my current view, but until the wave E is finished, I think it's pretty good chance that there will be a three-wave pattern here, and that the price will move to higher levels of resistance. This week, of course, we take a look at the Forex market, CFDs and stock indices and commodities in our webinars. Monday, weekly recap with Nenet. Tuesday, intraday strategy and indicators. Wednesday, strategy, again, intraday focus. And Wednesday, netted session as well. And then Thursday, we take a look at education, new intraday, and scalping methods. So we have a great lineup here. Lots of trading webinars, as you can see, from Monday to Wednesday. And then Thursday, an education webinar that discusses all the points that we mentioned in practice, but now looking a bit at theory as well on Thursday evening. Okay, let's start with the euro dollar and continue with the euro dollar. It's basically the same as the pound, so pretty much similar here. Price is moving up, but resistance, key resistance, is close by. The level that cannot be broken, in my opinion, otherwise the downtrend is seriously in question, is this top, 108.28. A break above that means that the bigger time frames, price is in a correction. As long as price stays below this 88.6 fib, all right, then I think that could be a resistance spot for a turn back down again. So I'm looking for price to hit 107.90, 108, just a little bit of upside, and looking for a bearish candlestick pattern at that level. And I think there could be a turn at least back down to the pivot, if not, with further extensions lower, depending on how strong of a reaction there will be at the 88.6 fib. And that is something that we'll only know once that happens, how price responds at that resistance. If price were to move up, hit the resistance, and make a bull flag, well, then, the chances of a downside are decreasing. And this could be just a continuation pattern for more upside. All right, so definitely important to see if there's a a continuation pattern like this occurring, or if there's a new momentum, strong momentum falling to the downside, and then we have actually a bear flag appear. In that case, the entire structure is looking more bearish, and price could fall from the pivot point down to the S1. So that's my main question with regard to the euro dollar here. That's the key level. From a bigger time frame perspective, the daily chart, that's important too, because is this the start of a new downtrend, or was this just part of a bigger correction really? And will price then move up to 110 if it breaks above 108? And that does seem likely that it could happen if price breaks that 108.28 level. So is it going to be that blue correction to the upside, or will it actually be downtrend, correction, and more downtrend? That question remains to be seen. Price is at strong resistance levels. Look at the Keltner, R1, previous top, moving average. But time will tell if it will be used for a down move, for a turn, and a retest of support. Dollar yen is in a bouncing spot too. The 78.6 fib is strong. I consider this a wave 1-2. I consider this again a wave 1-2 of a lower degree, and that this could all be within wave 3. So we could get a wave 3 push of a wave 3, a green wave 3 of a blue wave 3, and the 78.6 fib could be the starting spot. So could the 88.6 fib, but price should not break below this bottom, should not break below 111.67. If it does that, the wave 1-2 is invalidated. If it stays above that level, it's all still possible, and this could still be a wave 1-2. Now, if that's the case, and this is a wave 1-2, you can see there was a lot of momentum here. This could be a 38.2 fib bounce, and if this is a wave 4 and price is going up for a wave 5, there could be a lot of space to the upside. So if this is a 78.6 fib bounce with a wave 3 coming up, that means it could extend quite far. It could, because of course I don't have necessarily any guarantee that this has to be a wave 3, but there is a decent chance, in my opinion, that this could be the start of wave 3. So let's see if, for instance, a 4-hour candle like this closes 2 bullish candles in a row. That could be already an indication that this is turning. Or if price has 5 to 6 candles not breaking this low, like this, for instance, make an upside, make a hook back, and there's a weakness, and then starts to move up like that. A pattern like that could be also an indication that a turn is happening. Of course, price could also still move down and hit 88.6 fib. Any bullish engulfing twins there could be interesting as well. Or eventually, if price does show good momentum, a bull flag at the pivot point, then a break above that weekly pivot point could also be an interesting breakout scenario for more upside. All right, and last but not least, the AUD USD. It is actually looking bullish at this moment. Last week was a very bullish candle, closed near the high, indicating that bulls are in control. However, price is at and remains at strong resistance. Look at those orange lines from these tops. All right, it also has a Keltner and a moving average. So it is getting into a zone again, which is difficult to break. But it is the 1, 2, 3rd, 4th attempt. So typically, when you see so many times price trying to push through resistance or support for that matter, the chances of this indeed happening and succeeding increase as we get more and more attempts. So I think there's a decent chance that price might break through it this week. For instance, if this week's candle has a close near the high, something like this, I think that there's a good chance that price could get up to the -272 target at 81.16. Within this week, because that's looking at this week's candle, still a lot of time between now and then. If we look at this week, I think the same could be said with today's candle, a daily candle with a close near the high. Could indicate that tomorrow there could be a bit of a retracement because there's an R1 close by and the Keltner, maybe back to these tops, but that could be a bouncing spot for a further breakout to the upside. So I will keep an eye on today's candle for information on whether it breaks or bounces. If there's, by the way, I should also add, if there is not a good breakout candle here, there's a huge wick here, for instance, price shoots up to the R1, but then closes all the way down here, and there's a doji with a bearish candle like this, for instance, that's a pin bar, and it could lead to price making a little bit of retracement and then falling down to the pivot point and the S1. Thanks for joining. Wish you all great trading, and talk to you soon. Cheers.